Hello everybody, I think we'll make a start. So welcome to this week's live stream. My name's David Jones. Normally do this every Friday at 2:30 and it's, if you haven't been on them before, a quick catch up with what's been going on in markets, the big markets, indices, gold, silver, oil, natural gas, some of the FX markets, a catch up with what's been going on there. So we'll do all of that, and then once we've done that, we'll go into the questions. So any stuff you want looking at, we'll take a look at it there. I've been away up until this morning, so I've just been catching up on what's been going on this week. Let's get the risk warning out of the way first of all, then we can jump straight into it. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, contracts for difference, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Right, let's have a quick look at the major stuff that's out next week. Even though it's the start of a new month next week, I don't think the payrolls are on next Friday. We're going to have to wait another week. So 2 weeks today is when we find out the latest payrolls number. But there's still plenty to watch next week. On Wednesday, we've got Australian GDP. So how well or not is the Aussie economy doing? We've got US manufacturing PMI on Wednesday. Clearly with the whole inflation concern at the moment, that could be an interesting number. And with the focus more directly on consumer inflation, that's on Thursday. So we've got European CPI and Japan inflation data out on Thursday. So still plenty to watch. And this week, of course, we had the Fed minutes out on Wednesday night, it's pointing to further rate rises to come to try and control inflation. Then we had, I think, slightly lower than expected US GDP this week. I think the market was expecting 2.9% growth, and it came in as 2.7%. But I think that the Fed minutes, it seems to be, was the big news of the week. Before we get into it, a quick reminder that I do run a trading course. There are two courses as part of the course. There's medium-term trading, trades over that tend to run for weeks and months. There's 11 video lessons on that. There's the shorter-term trading module I launched last year in September. 7 video lessons on that. 4 live webinars held once a month for those on the course. If you can't attend live, they all get recorded. And there's a WhatsApp group that runs for those on the course, chat about what's going on in markets throughout the week. When I did the short-term trading course, I traded an account. I didn't trade it publicly, but I used to talk about it every week on YouTube, and I've showed the numbers. So using the approaches I outline in the course, so I traded this account from November through to January, so 3 months trading. Started off with a £4,000 balance, and closed profits as of the end of January were up just under £2,200. So a 55% return, much better than I thought it was going to be. I did, of course, expect it to be profitable over the 3 months, just not on that sort of scale. I have to say, of course, past performance does not guarantee future performance, but that's what the numbers look like. Go to the website and you can find out more about all the trades that made that up. To find out more about the course, you can read about it on Trustpilot. So on Trustpilot, it's David Jones Trading. So some of the people on the course have been kind enough to leave reviews. I launched a newsletter a few weeks ago now. It's free of charge, comes out every Saturday, normally Saturday morning, my time. If you go to the website, jonesthemarkets.com, and go right to the bottom, you can sign up for the newsletter and be on the list to get that every Saturday. It's a look at what's happened that week in markets, the hot market I'll be watching in the week ahead, and also a trading tip in there as well. So if you go in, sign up there, then it just gets sent out once a week. I don't spam you, so it just comes out once on a Saturday. So to find out more, go to the website, jonesthemarkets.com. The link is in the description of this video. And if you have any questions about anything, drop me an email. My email address is dj@davidjonestrading.com. As I often say, I do not have all the answers, but I can definitely give you an opinion based on my experience. Right, let's get into it. Let's take a look at these markets. So what should we start off with? Let's start off with stock markets. I am long the NASDAQ at the moment. We'll start off with the S&P. I've been surprised by how far this sell-off's gone. I did wonder if we'd have a bit of a bounce back this week, but we haven't had it. But going back to the big picture, let's bring up an RSI as well. I'm not sure if the dart, I think I did see in the past, just to go slightly off topic for a bit, I'm not sure if the white background works better. Let me flip this over, because on a dark background, I mean that's pretty light. On a dark background, it can be a bit hard to see on YouTube. So if you could, let's go with the white for a couple of charts, and if white is massively offensive, let me know and we'll flick it back to the darker background. But perhaps the white works better. Anyway, the downtrend in the the S&P. So we'd had this downtrend in US stocks. I'm going to pick up on the S&P one. Oh, I've drawn the wrong line again. See, I'm sorry, I was out of practice this week. So I'm going to pick up on the downtrend there. So I'm taking the view that the moves we've seen so far this year signify the end of that downtrend. So I bought into the NASDAQ about a week ago, I think, maybe a week and a half ago. We'll look at the NASDAQ in a second, and I'm taking the view that perhaps we're going to see this market continue a bit of a recovery. So far, bit sideways after I got in. The market's backed off a little bit. I think it's going to be an interesting week next week to see if that trend holds. This is the S&P we're looking at. We're looking at the NASDAQ in a minute. So for me, on the S&P, I think the first area I'll be watching next week, we're currently trading 39.60. On the S&P, we have these old lows from the middle of Jan, just before the market sort of ran out to its best levels since August last year. So I think it will be interesting. Clearly the market's under some pressure today as the market's opening to see if 38.79 holds, if we see this market sell off much further than where we are now. If we look at the RSI down here, heading towards oversold. It's pretty much the most oversold it's been, 10-day RSI, since the end of September. So let's see. So like I say, my trade is for the markets to recover into the weeks and the months to come. In the short term, it hasn't worked out that way so far, but let's see if we see these buyers come back in the days ahead. We've had one vote for a dark background so far, so I'll carry on with white for a couple more, and then maybe flip it back to the darker background if people do prefer that. So there's the S&P under pressure. Are we going to see a bounce next week? Same sort of story for the NASDAQ. If we pick up on the highs from last year, 2021 it is, November 21. And again, I think for me, the strength that we've seen so far this year suggested that perhaps the market was starting to change direction and break out of this downtrend. We've seen the NASDAQ again under some pressure over the last week. Let's see what happens in the week ahead. So the level I'll be watching on the NASDAQ to see if there's a bounce back. First of all, around 11,800. So a couple of 100 points below where we are now. And I think if it starts breaking down below those levels, it does start to look like the risk is this has been a false break of the downtrend. And perhaps the risk is the market goes back and revisits the lows, sub 11,000. So let's see how it turns out. But absolutely in reverse over the last week. Interesting to see if these old levels hold in the week ahead. Let's have a look at the FTSE. So FTSE 100, we had those record highs for the FTSE in mid-Feb. Backed off a bit since then, but the strength from October, the trend from October is still intact. So not surprisingly, with US markets under pressure, we're seeing other world stock markets being dragged back as well. But with the FTSE, we've got a lot of support running at around 7.7 for the FTSE, so a couple of 100 points below where we are now. So again, this is another market that I would expect it to snap back in the days ahead. Let's see how that one works out. Take a look at the DAX, the German market. Pretty boring, the DAX, over the last couple of weeks or so. But the trend off those lows, those October lows, is still intact. Lots of support from 14.9, shorter term support at 15.2. So we'll see how that one works out. So there are some interesting levels for these stock markets, I think, next week. No market moves in a straight line. We have, particularly with the US markets, seen a deeper sell-off. Let's see if we do see the buyers take the view that this is just a dip that needs to be bought rather than the start of a move back to the old low. So an interesting week ahead, for stock markets next week. Now the dollar index, I'm the wrong way on this one as well at the moment, but if there's one thing I've learned over the years is to be patient. I have my stops in place above 105.60 on this one. I did think that if I pick up on the downtrend, so we've seen, because I think partly fueled by those Fed minutes this week, with the threat of higher rates, and perhaps more aggressive rate rises to come than we were expecting. This was the trend I was playing on my short dollar position. So I went short somewhere above 103.50 and wondering if we'd see the US dollar turn down once again. It went a bit sideways, sold off a bit, and now we're up here. So the US dollar is trading at its best level since the 6th of Jan. So we're at a 6-week high for the US dollar. Interesting one to watch next week, the dollar index. If it breaks 105.60, if it breaks that level, then I will be throwing in the short on the US dollar and thinking that actually this trend is now reversing. I do wonder if we'll see it start to run out of steam. Let's see. What I was looking for was perhaps another retest of the sort of 101 area on the dollar index. So let's see what happens up at these levels next week. Again, for fans of the RSI, pretty overbought on the RSI, up to its highest levels since September last year. But as I often say, when we're looking at indicators, they will move to an extreme in a strong trending market, and we have had for the last few days a strong trend on the dollar index. But for me, 105.65 ish, which are I think the highs for the year so far. Yeah, 6th of Jan, 2023. I think that's the level to watch to see if this market is going to run out of steam. It's only about 40 points below it, so it could be an interesting market to watch for the rest of the session. And then tying into that, of course, is everything else. Euro US dollar. I haven't traded this yet, but I do think if we go right back on the euro, if we pick up on, let's say from Feb 2022, so a year ago, we'd had this great trend on euro US dollar down that looks something like that. So a lovely downtrend in the euro as the dollar continued to gain ground because of inflation and all of that stuff. Then we saw the market break out. The euro get some strength in November last year. I wanted to be a buyer of the dip, and here we have a dip. So we saw the euro in early Feb trade up to, how high did it get? Let's have a look. 110, and here we are at 105.5. So it's dropped 400 plus points in February, and it's been a fairly relentless drop. It did look in here as if it was perhaps trying to stage something of a recovery, but still weak again. So for me, euro US dollar, it ties up with that 105.65 ish level. It's the low for the year on euro dollar. That's the one for me to watch next week. That's coming in around 104.80, so about 60 points below where we are now. So I do still think we will see, or I am, that's the wrong thing to say, let me think. I am expecting further euro recovery this year. It just depends how far this sell-off is going to go. So I will be buying it at some point, but I won't be buying it yet because the thing is still going down. But interesting to see if 104.80 holds next week. let's see what happens. Pound against the dollar. Pound against the dollar. Slightly different moves we've seen in the euro. And if we flip back to the euro, beginning of this month, the euro traded to its best levels since April last year against the US dollar. Pound against the dollar has been, it made a high in December, but it hasn't been able to take it out. So I think it's interesting, the pound, that 124.50 has been the big barrier for the pound. On the downside, on the dailies, the low for the year so far is in at 118.40. And we did see it just last week, a week ago, trade down to 119.14. So with about 70 points to that low, did see the market bounce off it. And here we are again. So are we going to see once more the buyers step in for pound against the dollar? Clearly, I think if we see that dollar index break that level next week, it is going to put pressure on the pound, and we could see a much deeper sell-off. So for me, 118.40 is the level to watch next week, but it's probably not a trade I would be doing because it's all been a bit sideways since December. Let's see how it stacks up next week. And if we have a quick look at euro sterling, we don't normally look at this, but again, just to demonstrate how over the last few months, even though the dollar had been a bit weaker, the euro has been stronger than the pound. So this is euro sterling. We're taking the US dollar out of the equation. If we go back to early December, 1 euro was worth 86p. And now it would buy you 88p. Okay, so we've seen euro strength over the last, whatever it is, over the last few months. So we've seen the euro push higher against sterling. But so an interesting one next week. But for me, dollar index is the easier market to watch. I know what the level is I want to look at. 105.60. It turned away sharply from here at the beginning of the month. If it cracks 105.60, then I'll absolutely have to revise my view on the dollar index still being in a downtrend. So an interesting one to watch next week as well, that one. Let's take a look at gold and silver. Gold, again, of course, we're being driven by dollar strength here. Price of gold is still weak, so currently trading at 18.10 today. So we are back to levels not seen since the end of last year. So fresh lows for 2023 again today on gold. I did wonder, I put a video out 2 or 3 weeks ago, I think it was, wondering if we'd seen the best for gold already this year with that run up to 1960. It was a big move for gold, from what, $1,600 or thereabouts in November to 1960 in Feb. $300 move, 20% move ish in the space of a few months was a big old move. With that dollar strength coming back in, the price of gold has been hit. Still weak for me today. If we flip it over to the hourlies, it's a market. We could pick up on if we take the downtrend after the thing really sold off. Let's say from here, something like that, perhaps. Even if we saw gold rally $20 from here, that trend on the hourlies still looks pretty much down to me. So still under pressure. If we're looking for areas where perhaps we might see the buyers come in, let's just flip it back to a daily chart. We saw a bit of to and fro for gold in this region from 1760, the early December lows, to about 1820. This sort of region. So again, perhaps there's scope for a bit more gold weakness here. But if we're going to try and pick the bottom, it'd be interesting to see what happens if it starts slipping below $1,800. Perhaps we'll see a renewed appetite to be a buyer of gold down here. If that US dollar index, if the feeling is the dollar index run has gone too far. But again, pretty weak. And you can see with a lot of these markets, I don't pay a lot of attention to RSIs and things like that. I think it's very easy to get bogged down in these indicators and use them to ignore the trend. But a lot of these markets, because of the moves we've seen over the last couple of weeks, momentum indicators are reading at extremes. Gold's no exception. This is the gold RSI, which is now back down to levels not seen since September last year. So in these things that are quoted against the US dollar, because the dollar's had a good run, we are seeing some extremes on these indicators, but I would never use the indicator as a reason to buy. The price has got to stop going down first, to put it simply, to start thinking about buying. But gold, absolutely still under pressure at the moment. Silver, hate silver, often say that. Silver's slipped lower. So silver is trading at its lowest levels since November last year. I mean, it's interesting. Silver is, I know I've said it lots of times before, I think silver is, if there's any market that has wrong-footed me over the last couple of years, it's been silver. And it's one of those markets, I buy it, it goes down, I sell it, it goes up. So I tend not to trade silver too often. But if you thought that perhaps, let's change the colour of that, if you thought that perhaps there was a bottom coming soon in silver, I think this is interesting. These lows from November, where the thing had made a base around the $18 mark, lurches higher, backwards and forwards for a bit, and then gets a move on. And that level is about $20.50. So let's see what happens. And again, this is another market where obviously it's all tied in with what happens with the US dollar. If the US dollar continues to power higher, then silver is going to carry on slipping down. And we're seeing someone's changed their vote for the white or the dark background. So I think we're going to stick with white so far. So thanks for the feedback on that. So another one interesting next week to see what happens. Do we see the bounce come in for silver next week? Let's see. It's all dollar driven. Oil. I did go short oil today. It's the only trade I've done this week. I've got some open positions. As I said, I'm long the Nasdaq, short the dollar. There's a couple of open positions. I'll talk about some others as well. I think I've only got one other one. But I did go short the dollar this morning. And it's worked. I was due a bit of luck this month. It's been a tough month trading this month. But I went short because the thing made a new low on Wednesday. It ramped up and it stalled. It had a little look through yesterday's high, but it stalled ahead of Wednesday's high. So I did go short the dollar. It has fallen off a cliff. So short term, quite exciting. Medium term, it's the same old on the dollar. It's interesting. It's interesting that it's not doing anything. If we pick up on the thing, the downtrends, looks like that. That downtrend, you could say that downtrend ended in Feb, but we're still stuck in this sideways range on oil. We've got a lot of support in the low 70s, and we've got a lot of resistance ahead of 83.70, and nothing has changed. I would think that going into next week on the daily chart, on the medium term chart, there's a reasonable chance for a bounce because we're at the bottom of the range once more. But I suppose, this week, perhaps spooked a bit by the threat of further interest rates and the impact that could have on other interest rate rises, I should say, and the impact that could have on global economic growth. Slightly smaller than expected GDP number out of the US, perhaps worried the market. It didn't worry it too much. We're still stuck in this range, but so pretty boring. Medium term still, and it needs to resolve this range. It needs to break down or break up. I would be leaning to the thing recovering, so I would be leaning towards it breaking up through $84 at some point. But at the moment, what can you do? It's just trapped in this sideways range. Now, of course, the old favourite, natural gas. Let me change the colours on some of these things. I did see a question come in. I think I said last week I got stopped out of my natural gas trade. I ramped the stop up. I still lost money on the trade, don't get me wrong. But I did, when it wasn't actually recovering, I did come out of the trade. So I've had no trade on natural gas for about 8 days, I think now. It's pushed, this is why it's such a, it's a dangerous market because it pushed lower again 2 days ago. All right, so we saw once again a multi-year low for natural gas. So down at $2.06, the cash price for natural gas. But we've seen it bounce back over the last couple of days. So it's 243 at the moment. It's, in percentage terms, it's a big bounce. It's a 37 bounce. It's a 15-17% bounce in the price of natural gas. But the trend is still down. But it's these little bounces that tends to be almost death by 1,000 cuts, doesn't it? So this is it on the hourly chart. So trade's down to wherever it was, where I said 206. It was a strong turnaround Wednesday afternoon, and we have pushed higher since then. So it's ending the week short term positive. So there's always the scope for a bit more of a run higher, but we're still on the hourly chart now. Let's not forget we've got lots of barriers for old natural gas, and the big one on the shorter term chart for me is around, let's call it 275, the highs from the 8th of Feb up there. Let's see what happens. So I'd be much happier. I've done 2 trades this year on natural gas. I went short and I went long. So the short was a winner, good winner, and but obviously the long was a losing trade. So I'm still up overall on natural gas, but the next trade I will do would be going short natural gas. So for me, it's how high does it run before it starts to run out of steam. Let's see. So if it was up around 260, 265, to me it looks like a good short with stops the other side of perhaps 280. Let's see what happens. But if we look at the big trend, on natural gas, it has to do an awful lot to break that big trend. It's got to rally through $5 to break that big downtrend. Which is almost, well, it is doubling. It's got to more than double from where it is now. If we flip this over to a 4-hour chart, if we picked up on, let's say, this trend here from the 9th of January, so the trend for this year looks, that push, okay, you could say that trend was perhaps starting to reverse, so that could fuel some of the hope in natural gas, but I wouldn't believe it unless, and at least if it broke through 275. So I would still be tempted to be going short natural gas. Let's see what happens. See if it can bump up to here. Does it run out of steam again? Never a dull moment. But as I often say, I dread to think how much money has been lost by individual retail traders and institutional traders, I'm sure, trying to call the bottom in this move in natural gas that started, only started in August last year when natural gas was at $10, and this week it's touched almost 2. It's lost 80% in what's that? 6 months? 6 months. 80% fall in the gas price in 6 months. And in the same way, I can remember there were loads of people going short on the way up in natural gas. So yeah, lots of fingers burnt in that one. Let me have a quick look. I'm just trying to bring something up. What's that? I was going to see if I can get the sentiment numbers up. Just to see, because I absolutely bet that most people who have a position at the moment would be long, trying to pick the bottom. Hold on a second, let's have a look. Here we go. So here's a snapshot from a popular broker. 92% of clients who have a trade on this market are long. So again, that figure was was it 95% a few weeks ago? So long and trying to pick the bottom. Let's see what happens. So that's natural gas. So we've done a good mix of things there, haven't we? I think some other interesting markets. Stock markets are interesting. I'm going to wait and see. Are we going to see the bounce in stock markets? We're absolutely not getting it today. Dollar index is interesting because I am seeing, is it going to fail ahead of 105.60? So for me, US indices and the dollar index are the interesting markets to watch next week. Let's see how it works out. Other markets I've got a trade on. I've got the live cattle trade on. This is my sort of trade. This just plods up every day, no dramas. So live cattle, I think that was that came up in one of the what was it? One of the live streams a few weeks ago. So I added it to the watch list. Lovely trade, lovely trend, I should say. I don't know if it's a lovely trade yet till I close it, but the trend in live cattle has been higher. We looked at orange juice. Was it last week we looked at orange juice? I must admit I didn't do the trade, but we were looking at it based on this trend and the breakout. And this time last week, it had come back to the breakout line and recovered. That's moved ahead nicely. The orange juice market there. Interesting to see what happened. And palladium, one we used to look at a lot before, that looks like an incorrect chart to me. It looks like it's missing data. Anyway, the interesting thing with palladium, I haven't got a trade on palladium, but it's breaking below. It has broken below a multi-year low. Let me just make those lines a bit clearer. There we go. So these old lows on palladium, actually going back to here, wherever that was. March 2020, so the COVID lows, around $1,500. Palladium's gone through it over the last week or so, and it touched. You know, it was only less than a year ago. It was 3,300. So the price of palladium has more than halved in the last year, and it's currently trading at its worst levels since June 2019. So some interesting stuff going on in these other markets, but plenty to watch next week. What we'll do now is jump into your questions. But again, a quick plug from the sponsor, which is me. Read the Trustpilot reviews, David Jones Trading. If you're thinking about doing my course and you want a bit more reassurance, understandable, go to the website, jonesthemarkets.com, sign up for the newsletter, which will go out tomorrow. I haven't written any of that yet. That's my job once I finish today. This today is write the newsletter. And any questions, drop me an email, dj@davidjonestrading.com. Right, what we'll do now, we'll jump into your questions. So let's jump back onto the markets, see what's going on, and have a look at any stuff. So natural gas, we did natural gas. Yeah, big trend is still down, but perhaps it'll squeeze a bit higher in the short term. Have you seen that Wall Street Bets found out about natural gas? No, I haven't, but it doesn't surprise me. I mean, Wall Street Bets, if you've never been on it, I read it infrequently, but Wall Street Bets is one of the Reddit, what do you call them, forums for trading, and it's clearly the whole GameStop thing from, was it a couple of years, GameStop, the whole short squeeze thing. And I think they do refer to themselves as degenerate gamblers, perhaps even worse. So it's perhaps not surprising that they have found natural gas, the wonders of natural gas, as a way of losing your money. Aussie dollar, New Zealand dollar has been in an uptrend, but was knocked back a couple of days ago, but has held above 109. Let's have a look. Aussie dollar, New Zealand dollar. Would you be a buyer after a bit of strength with a stop at 108.80? Yes, I would be. It's nice to look at a market where we take the US dollar out of it, actually, because the US dollar, clearly, with the strength we're seeing, a lot of the FX pairs where the dollar's in there, it's all going the same way. But if we look at this Aussie dollar, New Zealand dollar, I would say the trend looks like that. So it's fallen out of the trend, but as I often say, just because it falls out of a trend doesn't mean the trend's going to be over. So for me, interesting market to watch next week. Still weak today. We've been slipping down all this week on Aussie dollar, New Zealand dollar, but I think it's an interesting one to watch to see if those old lows hold. Exactly as you say, 1088 for me, the lows to watch next week on the Aussie dollar. So that is an interesting market. There's a bit of bearish divergence going on for fans of the RSI. So the market, it's not a brilliant textbook example, but the market traded to a high in January, pushed higher into Feb, and we've got lower highs on the RSI. So it can be a suggestion that perhaps the trend is running out of steam. But I think that's an interesting market to watch next week, Aussie dollar, New Zealand dollar. So let's see what happens. Let's see where the strength comes in, if the strength does come in. Can we have a look at sterling yen? Yes, sterling yen. What have I got going on here? Hold on a second. Funny old year in sterling yen, isn't it? I mean, it was a great market, again, for me a few years back. I think it was 2020, 2021. More 2020. Oh, actually, no, the early part of 2021 into May. Some really nice trends in sterling against the yen. And the last year, this is pretty much the last year, pretty scrappy. Volatile, but you'd say broadly sideways. Anyway, can we have a look at sterling yen, long and targeting 167? Okay, I think that's an interesting trade, actually. I mean, let's walk through what's happened on sterling yen. Let's perhaps break it down to an hourly chart and see how that trade stacks up. Okay, so if we were looking at it, it's had a big break, hasn't it? Relatively speaking, we'd had the highs for sterling yen since end of last year, around 162. So you can see, tries it, keeps failing at 162. And then we had this move earlier this week, breaks out, pulls back. We're still pulling back this morning, so I probably wouldn't have been a buyer just yet, but interesting to see where it ends today. So for me, if I was a buyer today, at the end of the day, depending on where it ends, let's say I buy today at 163. If I was looking for 167, the closest I would have my stop would probably be 161. And that's not a bad trade because I've got 200 points risk, and if you're saying 167, you've got 400 points upside. So it's not on the face of it, it's not a bad risk reward trade down here. But if it broke 161, I'd start to think, oh, this is a false breakout. But that's an interesting one. Another one where we've taken the US dollar out of the equation. So an interesting market there. Let's see where it ends the day today. I mean, if it didn't make much progress, let's say I don't have a trade on it, but let's say I was thinking about trading it. If it ended the day back down at 162, I wouldn't put a trade on today personally. I'd see where it went next week because it did make a fresh low overnight for that down move, and it was pretty weak yesterday afternoon. But it's an interesting one though to watch that and see if this breakout that we've had on Tuesday, Wednesday ends up being a valid breakout, and we see it get a move on. And you're saying 167, which doesn't look too ridiculous at all. Perhaps even more ambitious, you go 168, 169. The old highs, we're going back to December, but let's see. It has this week hit highs for the year. That's an interesting market to watch next week. I'll pay a bit more attention to that next week than I normally would. But yeah, I'd be a buyer with a stop under 161 on that. Natural gas, got stopped out of that the other week. Hello, David. Regards to US dollar, show us 100 ZQ, 30-day federal funds futures on a monthly basis. Shows that US dollar could go up until August or thereabouts. Okay, 100. I've got absolutely no idea what this is, so I don't know what it is, but there you go. 30-day federal funds futures is the market. It doesn't like it. Maybe because I'm not paying for access to that futures exchange. Oh no, I need to pick a month. Continuous. Let's pick continuous. Okay. Doesn't want to do it. Sorry for me. So it's not bringing up the thing. But if you want to research that more, it is. You can see here the 30-day federal funds futures. So Mentas is saying that's implying strength in the US dollar until August. So let's see. Let me just make sure it's not just frozen full stop, has it? Let me just type something in and see if it works. HSBC holdings. No, it's just that particular market, I think, because I don't have. I'm not paying for permissions to that market. David, with the chop in various markets, are we more in a sideways environment than a trading one? So trade the range. This is a good question. I mean, it depends. It depends is a bit of a cop out, isn't it? But I would say, dollar index. That is a market that has been trending higher this month, but trending lower since September. So there have been trends in that market. S&P, again for me, it's trending lower over the last year, trending higher over the last few months. So I think it depends what time frame you're trying to trade. So for me, in those markets, there are definite trends there. If we look at something like oil, then there is absolutely, we've got a sideways trading range there, haven't we? And you're right. You have to absolutely adapt your approach to whatever the market is doing. Personally, I tend to avoid sideways markets, particularly for medium-term trading. My ideal market for medium term is something like that, live cattle, where we've got a definite trend. I think coffee we looked at the other week, that maybe there was a new trend starting in coffee. So for me, if it's a sideways market on a daily chart, I'll usually ignore it and go and try and find a market that's trending. But if I'm looking at it from an hourly point of view, and my oil short was based off an hourly chart, because based off a daily chart, I'd do nothing because it's sideways. But my trade on oil was based off an hourly chart because we definitely do, we do have a trend going over the last, week and a bit in oil when the market's been down. Yeah, so I think it's perfectly right what you say. and you just need to decide what sort of time frame am I trading, and don't break the rules because you're bored. Don't trade if you don't normally trade a sideways market on a daily time frame. Don't trade it because you're bored, because there's normally enough going on somewhere. Can we have a look at the Dow? Yes, we didn't look at that one. Let's have a look at the Dow because it does move a little bit different, doesn't it, to everything else. If we put in US 30, there we go, Dow Jones 30. Let's take a look at that. That has been sideways, as we've just been talking about sideways markets. It's interesting, the Dow, because clearly it's got a slightly different makeup to the S&P, very different makeup to the Nasdaq. The Dow is 30 stocks, only 30 stocks, meant to represent a cross-section of the US economy. If I was looking at it there, I would say that trend had ended, that downtrend. There was a reasonable chance that downtrend had ended. We've been a bit sideways since then, and it's a little bit crunch time again on the Dow next week. I must admit, I would lean to be a buyer of the Dow. I absolutely wouldn't buy it yet because it's still going down. What's going to be interesting, do these old lows hold? Around 32,460 next week on the Dow. Do these levels hold? And I think there could be a trade there. So for me, the trade I would think about doing, if we saw a bit of stability next week, take the view, we're in a range. Are we going to see it have a run back up to the top of the range, around 34,500, and figure it out from there? So pretty sideways since November. But coming back down to where we've seen buyers step in over the last 4 months on the Dow. So let's see what happens. But interesting one. Let's add that in. I never bother looking at the Dow normally, but let's add that in to the list and chuck it up there with all the other indices, because it is interesting that it looks a bit different. Well, the Russell, actually, now I've reminded myself, the Russell 2000. So this is again a US index. It's backed away, isn't it? I think somebody asking the other week about that. Because I think, again, it looks like the trend in the Russell, the downtrend in the Russell ended last August. But it hasn't been able to get any momentum. Nice little trade there, where it comes back down to the old lows from June, but then runs back up, but has run out of steam again, ahead of the old highs from August. So again, a bit sideways in the Russell. Needs to make its mind up. Would lean hogs complement your live cattle trade? Let's have a look. Lean hogs cash. Let's have a look at that. What's that look like? What do you say? It's near support. It's a different market, isn't it? Because live cattle is just going higher. Lean hogs is arguably, you could say, it's trying to make a base, isn't it? I mean, the only question for me, and as usual, it's a big question. If I wanted to buy it, would I buy it now, or would I wait to see if lean hogs go back to 8,200? I'd probably rather be a bit patient and say, well, let's wait and see. Does it break out through 93, 93.25-ish, that sort of area? So for me, it's not a trade. It's still an interesting market because we've seen it sell off so hard and then stabilise. I must admit, I can't even remember the last time I looked at that. So, and we do have big support down here, down at 7, down from October 21 for the price of pigs. I'm presuming it is. So let's see. So for me, I'm a bit non-committal. If I had to buy it, I'd rather be a buyer on a dip at the moment on lean hogs. Let's see how it works out. Euro, New Zealand dollar. All right, let's have a look at that. It's another one where we take the US dollar out of the equation. Euro, New Zealand dollar. So we're on a daily chart, aren't we? So I'm not a fan of charts that are like this, that again still broadly sideways, aren't we, over the last year and a half or so. Absolutely has been in an uptrend since December of last year. So again, we are seeing that euro strength playing out here, looking like that. So if I had to do a trade on it, I would be a buyer because it's made, just this week, highs for this trend. So I would be a buyer. I would put my stop, personally, I think it's tempting to put your stop below the low of today because we've had such a strong candle today, so that would be tempting. But just because we've had a strong candle, we had a strong candle back here in January, and the market did reverse and sell off after it. I would, if I was trying to catch that trend and ride it a bit higher, I'd probably want my stop the other side of 168 on that. An aggressive stop would be the other side of today's low, which is 169.80. So it's an interesting one. That for me, not the nicest looking chart, but you can see the move today that's made up that daily candle today. So a strong move, and there's that trend. If I go back, there we go. There's that trend going back to December of last year. So absolutely an uptrend on the euro against the New Zealand dollar. Let's see what happens. Rolls-Royce. I saw Rolls-Royce hit 18 months highs today, didn't it? I think I read that in the paper today or somewhere. Wow, what's happened there then? What's happened? Why is it had good earnings out or something? Because they normally move like that on earnings, don't they? 18% on new boss's turnaround plan. Oh, there we go. Okay. Blah, blah, blah. Last year's results under former chief exec and the bullish turnaround plan of the new chief exec, whose name I can't pronounce, Tufan Ergen Bilgic. Nice. So a nice move to the trend line over the last couple of days. And here we are. So it was 108. So this is Rolls-Royce, the engine company, of course, not Rolls-Royce, the car company, who are owned by BMW. This is Rolls-Royce Engineering. So Rolls-Royce touched 108 on Wednesday, and they're 136 today. So what's that? 28. So it's it's nearly a 30% run, isn't it? The last couple of days. So again, I would be patient. I would try to be patient and wait to see if there's a pullback. But no, I can't argue with that trend since October of last year. But I'd rather, we had a lot of excitement, clearly, results out, new chief exec. And for me, I never like chasing markets. I always want to wait to see if they come back. And the risk is it doesn't come back and it takes off without me. But let's see what happens. 150-ish has been a real problem. Let's see. Let's see if we get a bit of a pullback once some of the froth goes out of the excitement of the last couple of days. Let's see. Bank of Japan, new governor, currently not concerned with Japanese inflation over 4%. Well, and he's making a speech, isn't he? Or there's somebody, is it the new governor-elect of the Bank of Japan is making a speech next week, I think. I didn't put it on the things to watch, but I think it could be interesting next week. Let me just remind myself when it is. So maybe we could see a bit of volatility for markets in that part of the world. Oh yeah, but here we go. I'm guessing this is the gentleman or lady in question. I'm guessing it's a bloke. There we go. Bank of Japan on Monday. He's making a speech. So let's see what happens with that. Can we cover the elephant in the room? Tesla. The elephant in the room. Let's have a look at Tesla. TSLA. Tesla Inc. I don't know why these lines are yellow. Let's make it a bit more eye friendly. I'd be a buyer of the dip in Tesla. Personally, I was wrong last time round though. I was going to go short. I was absolutely believing this was going to be a dead cat bounce. I'd be tempted to be a buyer of a dip. The only question is, how far do you let the dip go? I would even if my arm was twisted, I'd be a buyer today. So I'd be a buyer today at 194. The closest I'd have my stop, the other side of 180. So on Tesla, I would take the view that the run since the January lows is still going. So I'd be a buyer of a dip with a stop under 180. That's what I would do on Tesla. If it starts slipping below 180, I think the risk is for a much deeper sell-off. But that is how I'd look at that one. Can we have a look at Hex again? What's Hex then? Hex. Hexagon Composites? Is it that? In the Euronext Oslo? Or is it Hex, the cryptocurrency? I don't know. You'd have to expand on that a little bit. But let's see if Hex, the cryptocurrency, has been doing anything. We've not had a crypto. I didn't look at Bitcoin. You'd have to look at Bitcoin in a minute. Okay, just to let me know which one that is. Let me have a look at Bitcoin. I haven't looked at that for a while. Let's have a look at that. Bitcoin futures. It's the same old, isn't it? I'd still be going short. for the reasons I said the last few times. I just wonder if these old highs, it's banged right on those old highs, Bitcoin. So the high was 25,270 from August, and it just can't get through it, can it? Over the last week or so. So again, for me, I've talked about this. I think since we had this run up in Bitcoin in late Jan, I said I'd go short with a stop above 25,000, the old highs, because I think if it does sell off, we'll get a bit of a panic sell off with people who are going to see their profits or their smaller losses disappear and get into bigger losses again. So I think for me, the interesting thing on Bitcoin is if it goes back sub 20,000 again, where do the buyers come back in? But would think it would be a bit vulnerable up here. Hex crypto, okay, we're gonna have a look at it. I'm not a fan of these stupid cryptocurrencies. That's not the technical term for it, but that's the one I'm going to use. So great run in the old Hex crypto. So Hex crypto has gone from, let me just squint at the scale because it's so small, 0.025 in January to 0.063 today. So that is, I can't even do the maths. It's more than doubled anyway, hasn't it? So Hex crypto, again, I'd go short. There you go. That's what I'd do because they're all going to panic if it starts to sell off. So not that I would trade this cryptocurrency that I've never actually heard of. But again, for me, the same argument stands as with Bitcoin. We've had a bit of a run. There'll be loads of people, obviously. Well, I don't know. There'll be quite a few people who've bought Hex all the way down or at various points on the way down. So they'll all be nursing losses up until January of this year when it was at a multi-year lowish or something. So I think it's either bounce back up, and I think the risk is if it starts to sell off, there'll be a bit of a panic-fueled sell-off. So that would be my trades. Not that I'd actually trade it, of course. And I changed my mind. If it broke through 0.075, what is that? Is that 7.5 cents, I'm guessing, isn't it? If it breaks the 7.5 cents level, then I'd change my mind. But I think there's obviously still a lot of nerves in that market, in the crypto space. Lumber. I am watching this market. I should have traded it rather than watching it, but it's an interesting market, lumber. And I have watched it all the way down from here when I should have been paying much more attention and actually thinking about trading it. But lumber, so this is wood, obviously. In January, it was 370. It ran up to 540, and here we are back at 370 again. So what's going on in the lumber market? Well, we had this downtrend that has been in place since May of last year. And I've mentioned before that I think the price of lumber went nuts at the end of 2021, early 2022. And then we had the correction. And when I see this sort of move here, like we had in Jan, I wondered, is this the end of the trend in lumber? Is it going to reverse? And it went nuts. And this is now the famous, okay, let's see how far the pullback goes. So for me, I think it's a really interesting market to watch next week. If we saw a bit of strength in lumber next week, because it has been an absolutely relentless sell-off. I think today is the first day since the sell-off started, so the first day this month, that lumber, apart from that day, that lumber hasn't taken out the low of the day before so far, just about, I think. So it's interesting. I mean, it's only one day in a market that has just gone in one direction all this month. But let's see what happens. So I think lumber is bounce or bust time for lumber next week. And for me, the big level, the lows for the year, 365. So to a trend follower like me, it's quite an interesting market to watch next week. See what happens with this retest on lumber. Let's see what happens. China A50. So the China A50 got hit a bit, didn't it, in the last week or so? Let's have a look. Oh yeah. I'm finding it is a bit frustrating this month that stuff looks like it's reversing, like there, bang, absolute for me. It looks like it's breaking out of the uptrend, breaking out the downtrend, and we're building a nice little trend, and then bang, it's got knocked. So for me, if I was in the trade, I would still be in the trade. If I wasn't in the trade, I'd be expecting a bounce. But today it's still weak. We've moved for the China A50 index, stock market index. We've moved to the lowest since the 5th of Jan. I think this is another one next week. Let's see what happens down here. We've got big support at 12,670. Do we see the buyers come back in again? So it's another one for me that might be an interesting trade perhaps next week if we see a bit of stability come in. But absolutely still weak at the moment, as we're seeing with these US indices, similar sort of moves where we have the recoveries, but they've all been clobbered over the last week. Similar sort of stuff going on with the Chinese index. So a bit of a wait and see. BP PLC. Let's go for the UK listing. Where is the UK listing? Oh, here it is. There we go. Time to short. Oh, do you know, I had these in the past up here and came out with them and never got back in again. Time to short is the question. I would say, I wouldn't go short because the trend is up from November 2020. So we're two and a bit years into that. If you absolutely wanted to go short, if you were taking the view, okay, the market's overreacted to, I'm guessing we've had results. Yeah, we've had results from BP. Beginning of Feb. If you thought the market overreacted, if I was going short now at 550, I would put a stop above 580. So in terms of risk reward, it's an interesting trade because for me, I'd have about 30 points risk, and if it pulls back, there's maybe 100 points in the trade, maybe 80 to 100 points if you thought it was going to pull back into the range from before. So I think it is interesting, but I personally wouldn't go short because the trend has been up on BP. But if you took the view the market's overreacted, it could be an interesting one for you. So we did China A50, Ethereum. We haven't looked at that one, have we? For a bit. Ethereum futures. So this is the futures market traded in Chicago. Pretty boring. I think so what we're going to say to that. That's I think Bitcoin is actually more exciting than Ethereum at the moment because if we looked at this is going back to June last year, so that's 8 months, isn't it? In Ethereum, I would lean to going short, not that because I just think cryptos are crazy markets, just because of what the price has done. We've pushed back up on Ethereum as we have with Bitcoin to some recent highs, and it's struggled. So maybe it's gonna sell off. So for me, the risk reward of that trade favors the downside rather than the upside. But it is just theoretical. Because I can't even remember the last time I traded a cryptocurrency. But for me, that Bitcoin does look interesting, as I say, and I would probably do the trade then. If it does sell off somewhere back into the middle of this old range and we see some strength, I think it could be an interesting trade then. Lots of bearish divergence on the RSI on Bitcoin. But not too much interesting yet for me in the old world of crypto. BP reported record profits in Feb, but now natural gas is so low, my logic is, what profits will they report next? That is the $100 million question. As ever, it takes two sides to make a market, doesn't it? Two opinions to make a market, so you may well be right. Let's see. Let's come back to it in a couple of weeks and see what it looks like. Right, we're going to wrap things up there. So I'm going to wrap things up there. So as usual, the newsletter will go out tomorrow. I'm going to write that now for the next few hours, send that out. If you're not on the list, go to the website, jonesandmarcus.com. To find out more about the training course I run, you can read about it on the website. You can go to Trustpilot, David Jones Trading, to read all about that. Any questions, drop me an email, dj@davidjonestrading.com. And let's see. So really interesting. I think an interesting week next week. Lots to watch next week. I'm not going to be doing the midweek live streams. I'm going to put them on pause for a bit because I've got just a lot of stuff I'm meant to be getting on with at the moment. So they're going to be on pause. But the Friday live streams will continue to run as normal. So I'll be back. And I can't believe I forgot this. I'm going to watch Wales-England tomorrow. Hopefully we are not going to get Wales and get absolutely stuffed. But the midweek live streams won't be happening for a bit. The Friday live streams will happen as normal. So I'll be back next Friday at 2:30 and we'll see where all these markets are. So until then, good luck with your trading. And as I said, any questions, drop me an email.